All right, good morning and welcome back to the UK live session. It's been now a long break for about 3 days now since absolutely it was not possible for me to speak. Even now, the cough is subsiding. I've got some infection which continued for 3 days, and now it's okay. I can continue here talking for the next 30 minutes. So a warm welcome to all who are joining in fresh to our family. Just a small announcement: we have successfully isolated two models over here: the existing YouTube channel and the Telegram channel at Hertz Japee. Will continue to free stuff, mostly free videos. And the emphasis is now going to be on the case studies and the wave counts. To begin with, we'll continue with the international segment: currencies, metals, bitcoins, Dow Jones, etc. And the next month, by the end of next month, or mid by the end of next month, mid next month, we will introduce the Indian segment as well. Right, just need to get some certification from SEBI. So plans are very clear. YouTube is going to be uh, the same, but the emphasis is now going to turn 100% on case studies and quality education. And the other uh, channel, which has been now turned into subscription, uh, will be focusing only on the live trade counts. All right, so continue to enjoy your stuff uh, on the YouTube. It's going to be much more value in terms of the education stuff in the days to come. So let's do some case study for Euro USD and the dollar index chart setups in this session, which could be around for maximum for about 30 minutes. All right, I want to do few different time frames starting with the weekly chart. So let's get started. Our goal to hit 1 million subscribers or viewers for the YouTube in this year. All right, the weekly setup first. Let's do the wave counts. That is a corrective drop. It's the first leg, which unfolded into 5 waves, and labeled as A, and the subsequent triangle unfolding as A, B, C, D, E. I presume to be wave B. Five down for the C wave to complete. It's going to be either wave 3 and then wave 4 turning out to be an expanded flat, or another wave count could be a 1, 2, 3, also sorry, taking into account 5 waves complete, the capital C terminating right at 1.0350. That's a lesser probable view, or at least for now. We are counting on an ABC expanded flat. So either we are left out with an option of a very meaningful corrective drop for the entire rally, which has taken place from 1.0350, or it's going to go below 1.0350 to complete the fifth wave and subsequently the wave C. These are the primary waves we have plotted here. That is your wave A, wave B. C wave is either done here, or it's going to go, or it could go below 1.03. We are not speculating on that possibility or probability at this point in time, but at least what we are intending is a meaningful drop of the entire rally between 1.0350 through previous week's high at 1.2550 kind of levels. Now another thing which could be of great interest is a 10-year-old trend line resistance, which is passing very close to mid 2600 levels. Please note that it is passing very close to 2650. If we place the Fibonacci ratio on the retracement levels on the potential wave C and the 61.8%, Fibonacci resistance is also turning around the 2640-50 mark. Right, so could be notable resistance around that area. All right, we'll be very keen to watch a bearish reaction over there. So that's the weekly very larger term view, 10 years view actually, from 2008 till date. If we go on the daily chart for now, we are keeping ourselves engaged on the selling on rally strategy, and we would continue to do so as well. Oh, monthly, that's a wrong thing. Daily. Wave counts first. And this is the last leg which we are witnessing from January 2017 onwards. Wave 1, wave 2, and then sorry, we have an extended wave 3, in the making. All right. Potential wave 4 is also done now, of the same degree. And a big question is that are we into the fifth wave, or is it complete? Waves 1, 2, 3, or 3. If that's the case, we would see wave 4 terminating here. And then wave 5 here. That would be the fifth wave. Sorry. And the other question or the other possibility would be that we've completed the fifth wave for now. So let's do some trend lines and support resistance on the daily chart before we shift our focus to the 4 hours and the hourly chart. When we are doing a case study, I mean, this is what the normal protocol for the live sessions would be, to do case studies, an educational point of view. Of course, that gives a potential trading direction if you look into it. But these sessions should not be taken as any kind of personal solicitation for trading purposes. It is a pure, as the channel descriptions now suggest, it's a pure, or it would remain a pure educational channel for the days to come. Alright, that's the immediate support trend line, or maybe I can change the angle a bit here. That would be the immediate support trend line, and that's the outer support trend line. So, talking about the possibility and probability we discussed on the weekly chart, if we kind of try to put the same perspective on the daily chart, then a meaningful retracement, what we were talking about on the weekly chart, after the impressive rally all the way through the 1.0350 towards the 2500 level, could be on the south side. Could be in this manner, ABC. All right. So potentially, if that is wave 5, we are also, or we should be witnessing the oscillators producing divergence levels. And you can see that at least the RSI has been lower of the wave 3 peaks, which went all the way up to 78. So bearish divergences are on display in accordance with the termination point of the fifth wave, and that implies, mostly it implies that we are very close to a major top in the Euro USD, and vice versa. We are very close to a major bottom in the dollar index. All right, we'll just pick that up in a few minutes. Now let's go a bit more closer on the hourly chart. Let's get rid of the other stuff. Those are the Thursday peak levels, 2537. Okay, if you look at the drop here, that is a 3-wave drop, ABC, which can be labeled as ABC, and the termination point let's label as A. two scenarios coming up now. It could be, then the other wave is also three waves, so it could be an A, B, and if this continues dropping lower, let's say, then it could be a 3-3-5, which could bring prices lower towards the C here. If it doesn't break below 2384 or 2355, then the possibility remains of potential C wave terminated already, which could lead towards a potential D higher, and then E lower again. That would be a triangle forming. Now, it's not a certainty. This is a probable scenario which I am presenting right now. It would be clear as and when prices unfold, right? So if it's a triangle view, then please watch out. There could be one more thrust higher above the 25.37 mark before Euro USD peaks out. All right. If we do a short-term trend line structure, a very short-term trend line from the potential wave 4 lows, that would be providing support for now. Right. So watch out for either a triangle formation right now in the next few hours, or an ABC drop towards the 22, 40, 50 levels, and then a rally, or a rally from here itself if it's a triangle formation. All right, maybe that's why we're not speculating on the top forming or not, but a general trading direction for the euro would be watch out for tops and watch out for selling on rallies opportunities, intraday, interday as well. Please don't forget the other fact, we are quickly approaching the end of the January series now, so watch out for meaningful highs and lows being formed across the board. All right, with a great potential for euro to top out in the next 24 to 48 hours. We'll be watching very closely, and good luck to you as well. Let's move out on the dollar index chart. If you would want to take the same view as what we did in the euro since 2008 onwards, the dollar index was supposedly expected for an ABC counter trend rally. If you're still wondering why, I just want to show the monthly chart. You'll understand why it is. There you are. There's an impulsive drop here. See how the story has unfolded wonderfully. An impulsive drop, five waves down, and then a 3 waves up. It remains to be seen whether the 3 wave up is completed or it is done and expanded flat. Now, if we go through the wave counts very quickly over here, then that is the impulse wave 1, wave 2, wave 4, and wave 5, which is possibly the first wave of a very larger degree. And then what implies after that, if you would like to go on a smaller degree and label the subwaves as well, then the daily chart is an excellent example. Oh, sorry, weekly. There you are. Keep into mind the bigger picture always, brothers and sisters. We are expecting waves A, B, and C to unfold. Alright, so let's do it. That was wave A would unfold into 5 waves, so here it is. Waves 1, 2, 3, 4, and 5. If the labeling has been done properly, then that would be wave A. And then a standard flat, unlike of a triangle of a triangle view in the euro, a standard flat capital B followed by, whether we are done 5 waves or not remains to be seen. Wave 1, and then ABC wave 2. It is going to be either 3, 4, and 5 as a capital C, which is also touching the 61.8% Fibonacci resistance around the 10380 mark, or a lesser probable alternate wave count, or A or B or C wave 4. That would lead to a wave 5 push one last time about the recent highs, January 2017 highs are at 10380 levels. All right. As always, the trend lines, that would be a slightly longer term. Short-term trend line is already broken, so I'm not plotting that. It's not required, but that will be even longer. So, are we looking for a low already formed at last week lows, or is it going to drop towards the trend line support here around the 86 levels? That remains to be seen. So, as far as the trade point of view or trading view is concerned, we would look out for buy on dips kind of opportunities for the dollar index in the days to come. And going on the daily chart before we move on to the hourlies, the next session we will take up a case study for Bitcoin. An ABC wave 2 here, and then an expanded wave 3, extended, sorry. Those are the sub waves. Up, 2. If you are watching these case studies live or the recorded version, Please always feel free to send in your comments, very valuable to me, to us all actually. I want to make this as a learning channel for all, including you and me. So that is wave 3, and also the larger degree wave 3 in place. Then subwaves A, B and C. The larger degree wave 4. The big question now, are we done with the fifth wave termination point? Wave 2, that comes to wave 3. Or wave 3 as an alternate. In that case it would be wave 4 here somewhere, and the fifth wave one more push lower. Alright. The resistance trend line still needs to be broken. I mean, we're absolutely still on the sell zone. It's not going to be that clear at this point in time whether bottom is formed or. But aggressive traders might have already gone long. But on a conservative point of view, the best trading strategy for now would be to watch out for dips to capture on the long side. The resistance now, if you would want to keep note of those levels, a simple game of support and resistance, if you want to play, then watch out for a break at least above the 91 mark, followed by mid 92 and the 94 and the 95. These are the 4 major resistances. That should be the flow actually. It should be taken one by one towards the 95 mark. So 1, 2, 3, 4 and 5. Neat little coverage, 5 down. Probably we are moving into an ABC higher, maybe towards the 98 level, if not towards a fresh high. There are the retracement levels. Alright, there you can see 97.94 is where the Fibonacci 61.8% resistance is turning out to be. As what we witnessed in the euro, we can I think we can get the same kind of divergence signals on the RSI if we watch out on the daily chart. It's not a great bullish divergence, but yes, the RSI is turning north again. The only exceptional case being is it forming, if it is forming a triangle, then it would be A, B, C, D and E, and then one more push lower. So it remains to be seen whether it's a triangle view or it's a 335 wave 4. In any case, it's going to be buying on dips opportunities in the next few hours or maybe next couple of days. Alright, so with these couple of case studies, let's bring the current session to a pause. And selling on rallies, the euro remains a favored trading strategy. Watch out for that. The reverse in the dollar index. And until the next session, I'll be back around 8 AM Eastern Standard. So until the next session, good luck to your trades, brothers and sisters, and thank you again for liking, sharing and spreading the word for this channel. Please take care and God bless. Goodbye.